Hey everyone, welcome back to the channel. Today we're taking a deep dive to look at the TAP Alpha Innovation 100 Growth and Daily Income ETF. This is better known as TDAQ. If you're searching for dynamic growth plus consistent daily income, TDAQ is worth a closer look. So let's dive in. First, let me introduce myself. My name is Wes, and for the last 3 years, I've been researching ways to make passive income in both the stock market and in cryptocurrency. And I want to bring my results, whether good or bad, to you through this channel. So if that sounds good to you, make sure you subscribe to the channel, and please like this video. I'd greatly appreciate it. So what is TDAQ? TDAQ was launched in 2025 and instantly grabbed attention with its clever approach. It tracks 100 leading innovative stocks, but it overlays a sophisticated option strategy. This aims for both capital appreciation and daily income. The fund is managed by TAP Alpha and is listed on the New York Stock Exchange, making it accessible for most investors. TDAQ's option strategy is the secret sauce. They use a 0 DTE, 0 days to expiration covered call approach. That means every trading day they write new covered call options at carefully chosen strike prices. This daily covered call strategy captures income from rapid time decay. This creates frequent distribution opportunities. The strike price selection balances the earning premium while still letting the fund participate in the upside of growth stocks. This gives TDAQ a potential edge over competitors with less frequent option overlays. How does TDAQ stack up against its peers? The main rivals of this ETF include QQQ, QQQI, GPIQ, QDTE, and QDTY. TDAQ's daily distribution model offers more frequent income than most competitors. Early returns show TDAQ has delivered double-digit annualized performance and a lower beta, meaning less volatility compared to the benchmark. TDAQ is known for its daily income. In its first 6 months, the ETF distributed income nearly every trading day. Payouts vary with market conditions, but the fund's focus on leading innovation stocks like tech, biotech, and fintech, mostly the QQQ, gives it a strong growth backbone. If income is your goal, TDAQ's daily payments really stand out, but remember, distributions can fluctuate and are not guaranteed. Always check the latest reports. Okay, as you know on this channel, I like to look at the charts. Let's look at the chart of TDAQ, which is very new. If we look, it's in an upward trend line, which is similar to what T-SPY is doing. That's its sister or the other TAP Alpha ETF. We can look at that one too, and this one is doing very well. It dipped with the rest of the market when the tariff situation happened, and T-SPY is at 25. What I think is going to happen is TDAQ is going to provide more distributions and a better percentage of distributions, and people are going to get lured into that, as well as the part where it's going to be more tech orientated. This gives you a better idea of how the funds are working in sync with each other. The white line is T-SPY, and the candles are TDAQ. So they're fairly similar. I think what's going to happen is if you are a more conservative investor, then T-SPY will probably be better for you. I'm not currently invested in either of them. I'm going to get into TDAQ very soon. I think it has a very bright future. I like what they're doing with 0 DTE options at owning the stock and selling covered calls against that is definitely a good idea in my opinion. I do that with other stocks as well, and I think going forward this will be a good one to dollar cost average on red days into. One other thing I wanted to cover is that T-SPY, this is the distributions they've had. and they're projecting the TDAQ to be much higher. Well, not much higher, but quite a bit higher, probably around 20%, I would think. Their distribution rate's been about 14.35%. So let's see, in September 3rd, they paid 29 cents per share. August 6th, they paid 29 cents per share. So if TDAQ is, 50% higher than that, I'm in. I'm in no matter what. I'm going to DCA into it starting probably this week, and I will let you know my results. I'm not 100% sure, but I think my strategy going forward with this is I'm not in either ETF, but I think what I'm going to do is I'm going to do a combination of both T-SPY and TDAQ, and maybe do probably either 50-50 or 75% TDAQ, 25% T-SPY. I think that would be, to have the backbone, like T-SPY is a little less volatile, where TDAQ has more growth, and I think the bull market's going to last, at least another 6 months, probably a little bit longer than that, and then I'll be very careful going forward after that. But I really like this fund. This is one of the best ones I've seen, and I'm going to continue to cover it probably weekly and see how it goes. All right, as always, thank you for watching, and have a great day.